We detected an unusual trade worth $8.1 million on Cloudflare stock, ticker symbol NET. But here's what makes it more interesting. The stock has dropped about 40% from its 52-week high, and Cloudflare reports earnings in just 2 weeks on May 8th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying into this opportunity before earnings or bearish and selling into this crash. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information such as earnings reports, to make better financial decisions. This is how smart money always stays one step ahead before the rest of the market catches on. No wonder the rich keep getting richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trade happened on April 22nd at about 10:50 for these January 15, 2027 options at the 115 strike calls. Since these options expire more than a year from now, they're what's known as LEAP options, which stands for Long-Term Equity Anticipation Securities. This does not necessarily mean we have to wait more than a year to profit. The fact that this wealthy investor is trading these LEAP options now suggests they believe they're getting a good price at this moment, that the stock may not drop much further from here. And based on the trade data, we can see they entered a price of about $30.30 per contract. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each contract or trade costs $3,030. We can then estimate the total cost of this trade by multiplying by the total contracts being traded. And so how many is that? Well, let's find out on the option chain. For the January 15, 2027 options at the 115 strike calls, as we can see here, there were about 2,700 contracts being traded at the volume. And so to calculate the estimated cost of this trade, we have 2,700 multiplied by the price of $3,030 per contract, and we get a total of $8.1 million for this trade. But keep in mind, the earnings report is being released in 2 weeks, so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website up here where you can get deep insights into exactly when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. As you can see here, since this was a new opening trade, we also traded these call options and got into the same position here. POS stands for our position, and the green color means a buy position. Now, how did we know these were new opening trades? Well, notice that these options have an open interest of 195 contracts, which is much less than the 2,700 contracts being traded. It would not be possible to close out 2,700 contracts if there were only 195 open contracts. And so we can conclude that this wealthy investor was opening new contracts and not closing out contracts. This data is very important to figure out, because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening contracts, like in this case, it could signal an opportunity for us to start a new trade. And so we always take this extra step to analyze the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. Now, with that being said, not every trade will be a winner, but as long as we diversify our portfolio with high quality stock picks backed by strong data analysis and use option strategies that can gain more than what we could lose, then we can stay consistently profitable over the long run. And so, if you want more trades from wealthy investors to diversify your portfolio, go to our website. We'll put a link up here where you can get access to more opportunities and strategies to increase your profit potential. Now, back to this trade, let's break down the data even further. Based on our deep research and analysis of multiple variables and other data sets, this wealthy investor bought these 115 strike calls for about 30 each, the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line as the share price goes down, this trade becomes more negative loss. And if it trades above it as the share price goes up, this trade becomes more positive profitable because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk on this trade. We have a negative theta, which means this trade loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though these call options have a strike price of $115, the stock needs to trade above $145 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. Let us know in the comments. Do you think Cloudflare stock is a buy at these levels, or is there more downside ahead? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.